Good morning, it's Monday the 21st of March and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets. We'll then take a look in more detail at some of the bigger stories straight afterwards. So, let's get straight to it. So, let's take a look at the economic numbers being issued this week. And today, the European Central Bank President Christine Lagarde is due to deliver her speech this morning. And similarly, later today, it's Fed Chair Powell's turn. On Tuesday, we'll get an update on UK public sector net borrowing. And Wednesday will be an interesting day for us here in the UK as we get the monthly update on CPI inflation, as well as the spring statement from the Chancellor. And we'll discuss both these important announcements after this. Also on Wednesday, the Eurozone Consumer Confidence update. Thursday, it's all manufacturing and service PMIs with updates from the Eurozone, the UK and the US, and also in the US, the durable goods orders and the jobless claims. Finally, Friday will tell us how retail sales have been faring as we start to leave the cold months behind us, and we'll discuss this in more detail towards the end of today's bulletin. And the companies that we'll hear updates from this week are as follows. On Monday, Nike released their third quarter earnings, and we'll talk about that straight after this. And as its share price continues to decline, retailer Kingfisher releases full year results on Tuesday, and we'll take a look at this in more detail afterwards. Also on Tuesday, Carnival, Softcat, and over in the US, Adobe. Wednesday, it's the turn of Saga, Petrofac, and in the US, General Mills. Thursday, it's the turn of Next as they release their preliminary full-year results, and we'll be discussing these afterwards. Also on Thursday, CVS Group. And finally, on Friday, Smiths Group and United Utilities. The Fed and the Bank of England hiked interest rates last week and warned over slowing growth amidst the fallout of the Ukraine war. This week's PMI data could provide early signs of slowing growth. In addition, headlines from Ukraine will of course continue to be watched closely. Here in the UK, inflation data will be released on the same day as the spring statement, with the focus very much on inflation and what Rishi Sunak may or may not do to relieve the pressure on households' income. Tuesday's net borrowing update will give us a clue as to just how much the Chancellor is going to be stuck between a rock and a hard place as he tries to balance the nation's books after an expensive pandemic and a population struggling with such an inflationary environment. Who'd be a Chancellor, eh? Well, let's take a look at some of this week's stories in more detail. Nike will publish Q3 results after the close on Monday. Now, the results come as the share price has underperformed the market in 2022. After a disappointing Q2, investors will hope that Q3 sales across the critical holiday period will have picked up. In Q2, weakness in China overshadowed strong growth in the US and Europe. With supply chain issues expected to have eased later in the quarter, a modest increase in sales in China could of course be on the cards. Nike's profit levels rose last quarter owing to higher selling prices and a shift to e-commerce. Are these positive trends enough to boost earnings even as inflation surged in late 2021 and early 2022? Expectations are for revenue to rise 2.6% to $10.6 billion, while margins are set to improve to 46.5%, but earnings per share forecast to fall 19% to 72 cents. On Tuesday, Kingfisher, the owner of Screwfix and B&Q, reports full-year results. Well, the company reported H1 numbers in September last year, and the share price has been on the decline since, hitting an 18-month low at the start of the month. The numbers revealed sales are rising 22% to £7.1 billion, and profits rising to $677 million. However, concerns over slowing sales growth unnerved investors and lowered the share price. Q3 numbers confirm those concerns, although management said they do still expect full-year pre-tax profits to be at the higher end of £910 million to £950 million. Q3 sales were down 2.4% compared to 2021, a tough comparison against a pandemic quarter when DIY sales, of course, boomed and thus weighed well on the share price. Screwfix has stood out within the business and is the only area that saw sales growth in Q3. On Wednesday, Chancellor Rishi Sunak will announce the spring budget as households across the country hope for some financial relief from the surging cost of living. National insurance contributions and dividend tax are both set to increase by 1.25% on April the 6th. It appears unlikely that Sunak will go back on this decision despite rising economic uncertainty on the back of the Ukraine crisis and surging inflation. The large tax bill comes as 3-decade-high inflation is already eating into households' disposable income. Pressure will be mounting on Rishi Sunak to raise public sector wages, which will then feed into the rising inflationary spiral. There have been widespread calls for a temporary cut in fuel duty, or VAT, as the cost of filling up the tank has, of course, jumped. However, Sunak could leave these untouched, given that reinstating the tax rate in several months could then be problematic. Keep an eye on defence spending as well, which could well get a boost in light of the Ukraine war. Wednesday also brings us an update on the CPI figures. Now, in January, UK inflation, as measured by the Consumer Price Index, was at a 30-year high. The Producer Price Index had continued to rise to 9.9%, its highest level since 2008, suggesting that inflation was still set to rise higher even before the Ukraine war started, pushing oil and food prices higher. Now, the Bank of England raised interest rates to 0.75% in the March meeting and said they expect inflation to rise to around 8% in Q2 and potentially to double digits in October should the Ukraine crisis continue to push commodity prices higher. So do keep an eye on the pound and the FTSE. On Thursday, the retailer Next announces their preliminary full-year results. As inflation continues to rise, households have less disposable income, which means less money to spend on clothes. Next falls into the mid-range price zone, being neither discount nor luxury, and the mid-range area is particularly vulnerable when customers start to rein in their spending. With this in mind, sales numbers will be under the spotlight for any signs of a slowdown. Expectations are for sales to grow by 3% in Q4, putting the annual growth at 7%. The strong growth is partly owing to favourable comparisons from the 2020 lockdown. Costs have also increased due to investment in upscaling the warehouse operations, which is expected to improve the online offering. Heading towards the results, Next trades down 20% so far this year. Finally, on Friday, we'll get an update on UK retail sales. Now, according to the Office of National Statistics, consumer spending rose 1.9% in January, rebounding after a 4% contraction in December. Now, although sales are picking up, the sector faces significant challenges over the coming months as inflation rises and disposable income declines. So far, the squeeze on household incomes hasn't been reflected in the British Retail Consortium, the BRC, retail sales numbers, which jumped 6.7% in February as Plan B restrictions ended. Adding to optimistic expectations, Barclaycard data showed that consumer spending rose 13.7% in February 2021 compared to the previous year, although the country was in lockdown. Expectations are for sales growth of 0.8% month on month in February. So those are the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from BATS, Pearson, Schroders, Prudential and Ferguson. And in the FTSE 250, we'll hear from XP Power, Greggs, Close Brothers Group, CLS Holdings and OSB Group. So there you have the highlights of the week. As always, thanks for watching. Don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. Also, as always, just a little reminder that if you haven't already downloaded our app, why not give it a try to make sure that you receive all the latest up-to-date financial news and trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.